Alrighty. Hello, everyone. Welcome. Good morning, good afternoon, good evening. Nicole here from ClinicSense. Thank you so much for joining us for our lunch and learn today. Today, we are going to talk about massage therapy, taxes, and bookkeeping made easy. We've got a lot to cover today, and I'm sure you've got loads of questions. So I'm just going to get straight into it. Then for anyone who's not familiar with ClinicSense or are intrigued for using ClinicSense for your business, here is the deal. We are your all-in-one practice management solution, and it's our mission to help you grow and manage a successful business. So what makes ClinicSense unique is how easy it is to use, the amazing customer support, and all the tools you have available to simplify running your business. The charting is easy, fast, customizable, and HIPAA and PIPEDA compliant. Scheduling is simplified for both you and your clients. We get loads of reviews of our customers saying their clients find the program really easy. Invoicing, payments, and reporting tools help you feel really confident about your finances. And there are also marketing tools to help you build and maintain really strong relationships with your clients, to help increase your client retention and manage your business reputation as well. So if you're not a customer and you are intrigued, we do offer a 14-day free trial. Just give us a shout in the comments and we'll help you get you signed up. And now onto the task at hand, about our guest, TK. We're so excited to have her on. She's got 15 years of experience in tax and accounting, and she specializes in tax and accounting for wellness professionals. I'm sure she'll tell us a little bit more about that later. But before we get into that, just a quick look at what we'll talk about today. So first, we'll start with bookkeeping best practices. We'll go through the basics of understanding your taxes. We'll go through deductions and credits, strategies for planning for your taxes, and also how to actually handle tax season. So without further ado, hi TK, welcome.
Hello.
We're so happy to be here.
Yes, I'm so excited to be here myself. I'm looking forward to all of the questions and just to be able to share the thing that I love to talk about outside of my family is absolutely taxes and bookkeeping.
Listen, if there's someone we can bring on that loves to talk about taxes, this is helpful for the rest of us. A lot of times, massage therapists, we don't get this kind of education in our training. So we appreciate you and we thank you. And for everyone joining, I know we just spoke about this, but why don't you tell us a little bit why and how you got into bookkeeping for massage therapists and wellness practitioners?
Yes, absolutely. So when I first started my business way back when, I have been in the tax and bookkeeping industry for a while now. But when I first started to, branch out independently, the customers that I had, the majority of them were already working as massage therapists. I had one person that was a med spa owner. And I got in contact with a coach, and she teaches other med spa owners how to build their businesses. And so we kind of collaborated because one thing that we found out was that a lot of people in this particular industry, they're able to, really be successful in it. But the problem is there is a gap, or, what you just mentioned, a lack of understanding when it comes to how to navigate those taxes so that they are able to maximize the potential there. And so I collaborated with other people and to give this education as well as for others and my in-house clients that I had. I wanted them to really succeed and make money in their businesses, but not overpay in taxes.
Oh, I love it. That's amazing and so helpful. So when we're talking about, let's go back to the basics. If we're talking into taxes in a minute, but I know we've got an audience from probably both the US and Canada. So let's talk about bookkeeping best practices. What is the basics, the essential elements of a good bookkeeping system?
Yes, I'm glad you said let's go back to the basics, because your taxes are going to look only as good as your bookkeeping. I mentioned, earlier to you that we just completed our season for S Corps and partnerships to file their taxes. And a lot of them, we had to go back and do a lot of cleanup because the basic foundation, which are the bookkeeping, has to be in order and in order for you to have a successful tax season. And so the first thing that you want to do as an entrepreneur is to make sure that you are tracking your expenses and all of your income that you're bringing into your business. That is number one. And after you have that step, down, then you're going to create a better foundation for you as, for your books and for your tax preparation.
And so how do you recommend people organize all of this? What do you use? How do you start making sure you've got everything right from the start?
Right. See, a lot of people always ask, TK, when should I start my bookkeeping? But it's more about it's more about where you are in your business. So if you just started, you don't have to go out and buy, a robust system or software to do it. You can actually just start off with a template. You can start off with just a template or like a spreadsheet, Excel. You can use something really simple to just make sure that you are all of the income that you bring in. You can track it daily. You can track it monthly. It depends on how much revenue you're bringing in. But what you want to do is just stick with the routine with it so that you're not getting off track, or you get busy with your business. And don't let that be the first thing to go to the wayside. But so you can start off with templates. Then there are softwares and apps that you can also use depending on what your business budget is. QuickBooks has a couple of apps that is cost effective. So whether you are starting off, they have a package for that. And then if you are, you have a lot of things to track, they have bigger packages that you can grow with. And I think I have a couple of notes here. I think Xero is a good one as well. It's Xero. You can use that. So it depends on where you are in your business. If not, you are able to just stick to the spreadsheets, or if you have a lot of generating income, that you can move up to something a little bit more sufficient, like a software or a subscription.
And as far as keeping track of all your things that you should be putting into all of your apps or your spreadsheets, how often do you recommend people do this? Is this a daily thing? Is this an as it happens thing? Is this a once a month thing?
Yeah, you definitely, if you don't have a lot of things coming through, then you definitely should be able to do that on the weekly basis. Like I said, if you have a lot of revenue and you're spending a lot out of your business, if you are, have a lot of expenses that you're sending out, then you at least want to set time to do that on the monthly basis. If you're at a point to where you're saying, I really can't hire an accountant or a bookkeeper right now, and if you're doing this by yourself, then yes, you definitely want to sit down at least every 2 weeks, but don't let a month go by and you haven't looked at your revenue and you haven't looked at your expenses, because the more things get piled on, then the more unorganized we're going to be. And so that's what we're trying to avoid. We definitely want to keep you organized. So I would suggest at least not letting a whole month go by without you looking at your income and those expenses. So at least don't let a month, but I would do it at least like on a weekly basis. So weekly to a month, depending on what your generating revenue is.
There's nothing worse than backtracking through your expense of trying to figure it all out. Going through the invoice.
That is not a pretty thing. And a lot of entrepreneurs, unfortunately, find themselves doing that, especially at the end of the year when it's time to file taxes. They have to go back 12 months of looking for receipts, looking for invoices, and that is just a headache. So yeah, just make a routine to where you're doing that on the monthly basis. And on this date, you're going to sit down, you're going to go through your invoices, go through your statements. And so you get a habit of doing that. So it's no problem. It's going to come systematically.
It's all about making the habits.
Yes, absolutely.
So as far as everything we need to be keeping record of and keeping track of, what are the important things for come tax time? What are the things we should be keeping very clear on for our taxes?
Right. So the biggest thing that you obviously want to have your revenue, your income, how much income did you bring in for the year? And then you want to have those expenses, like anything that you have purchased for your business, you want to have a total amount of what that is, because it's going to be the expenses that help break down any kind of tax liability or any kind of tax debt you would have. So the more expenses that you're able to legitimately prove is going to be better for you, because it's going to help you save on your tax liability. So you want to be able to have and show proof of those expenses. You want to track your income. And then anything else, like I know sometimes throughout the year, we may use our personal bank card, which is a no-no. But in the case you do, like you can still write those off. You just want to be able to track it correctly in your bookkeeping system. So I know sometimes we go out, oh, I don't have my business card, and so we swipe the personal card. So for any transactions like that, you don't want to leave those out either, because it's still a business expense, but you just need to correct it in your bookkeeping and make sure that it's added. So everything, everything's connected. And then you can also write those off as a business expense on your taxes.
I think that's the best advice I got at one point, was to just make everything separate, personal and business, because separating that afterwards is so confusing.
It is. Yeah, you don't want to get into it commingling. Commingling is a no-no. So definitely keep your business on one end, personal on another end. But in those cases that you just so happen to do it, and you buy something on your personal card, the best way to fix that is just to fix it in your books so that you're still able to write it off.
Okay, so when it comes to taxes for the business, and starting from the basics of the taxes, let's talk about the tax structures for the business. What should we choose? Sole proprietor, and what is best for which practice?
Okay, so when you first start your business off, most people are going to start off as a sole proprietorship. So the difference between a sole proprietor and an LLC is basically where, as an LLC, it's a limited liability company. So when you decide to take the next step to get an LLC for your business, you're saying, okay, I am going to separate myself, because you're giving your business that limited liability. So in the case that you were ever to be sued, they would not come after your personal assets. Only your business assets would be, out there to be taken. So the LLC is important for you to take as far as your protection when it comes to the liability part. But the sole proprietorship and an LLC both runs the same way. Those taxes are going to flow down to you on the personal level. And so when it's time to file your taxes for an LLC or a sole proprietorship, we're going to use the Schedule C, and this is for the U.S. taxation. We're going to use the form Schedule C, and on the Schedule C is going to report all of the income you have received for your business and all of the expenses that you have paid for your business. So that is how the sole proprietorship and an LLC reports its income, is alongside the taxpayer's 1040. Okay. But if you are if you choose to elect to be an S corp or a partnership, those are separate tax filings. So you would do your personal, and then you would do the business. Okay. So with the S corp, it depends on your revenue, because we hear a lot of right now, we hear a lot about businesses should be an S corp, but the true nature of it is that you really have to look into your finances to be able to determine when is the right time for you to become or take the S corp tax election. So if you're making about 60,000, if you have left over in profit, about 60 to 65,000 left over after all of your expenses, then that will be the time to really, get on the phone with an advisor and say, hey, can you please look at my numbers? I want to see if I'm able to take this tax election, because you want to make sure that your numbers make sense. Like it's not an entity for you to just jump out into, but you definitely need to make sure that it makes sense for your business and for your business revenue. So starting off, I strongly suggest, going ahead to get an LLC, because again, that is going to give you that limited liability for your company that you need. And then when you're growing, when you reach those numbers to where you're looking at about $60,000 in net profit, then that is a time to consider taking an S corp, really getting on the phone with someone to have that consultation to look at your business in depth. Did I answer your question?
Yeah. I'm sure when I look back at the bits, I'll like, oh, thank you so much. That was so info packed. Speaking of, just as a quick tangent, speaking of getting in touch with someone to help you, do you think therapists should have an accountant or someone to help them throughout their process, like from when they start their business? Or at what point do you think help should be sought?
Yes, so help should be sought from day one. When you make that first transaction for your business, you need someone to help you. Now, it depends on to what extent, but it's no problem with just like getting on the phone and saying, hey, we offer consultations. Like, you don't have to be a monthly member or a monthly client, but we do offer consultations to where you can just get on the phone with us and you can say, hey, TK, can you look at my profit and loss for this month? And we'll be able to do that and assist you to answer any questions that you may have. And so I believe, when you first open those doors and when you're making those first transactions, that is the day that you need a bookkeeper or an accountant. And hopefully you can find someone that is a bookkeeper, accountant, and a taxpayer. You can find someone that has everything under one roof. That is what we offer. So depending on where you are in your business, we would be able to help and support a client, along their journey. But yes, definitely when you first make your first transaction, that is when you need bookkeeping, whether that's you doing it on your own or if you're going to hire someone, but you have to have those systems in place, because you don't want to miss any money, you don't want to miss any tax deductions, and you don't want to overpay in taxes.
Are there specific tax obligations that we should be aware of? And what are they? What have you come across with your clients?
Yeah, so what I've seen so far is maybe not the tax obligations necessarily, but when you're hiring, one thing that you have to remind yourself is that a lot of people misunderstand payroll. So when you're hiring and you're bringing on someone to your staff, there are payroll taxes. And so when you cut a check to any employee, you have to remember that there is a percentage of those wages that you're paying that you are obligated to pay, as well as an entrepreneur, as a business owner. Because just like when we work for someone else, when we get our checks, and it would have like all of the FICA, and we were like, what happened to all of my money? Where did that go to? But it went to taxes. And so as an entrepreneur, as a business owner, now that you are cutting the check for your employees, you have to understand that alongside that check that you are paying your employees is also going to be payroll taxes that you are obligated to. So payroll taxes. And then there's also self-employment taxes that you pay as well, that is based off your yearly income. But with that, there is a self-employment deduction that you're also able to take too. So you end up paying half that amount. But so yeah, there are the payroll taxes, the self-employment taxes, and then as well as depending on what state you are in, if there is a sales and use tax as well.
And before we get into, I know you mentioned tax deductions, which I know is a big one. Before we get into that, what are the deadlines that people need to be aware of throughout the year for taxes?
So if you are an S Corp or a partnership, we just had a deadline for that, and that was March 15th. And so the next deadline that is coming up is going to be for sole proprietors, for LLCs. So if you are an LLC owner, or if you just have a sole proprietorship, then that next tax deadline is going to be April 17th, because remember, it's going to go alongside your personal taxes. So when we file your personal taxes, we're going to attach a Schedule C to get all of the information from your business, like how much you made and what type of deductions that you're going to be claiming for the year. So that tax deadline is going to come up on April 15th. I'm sorry, that's going to be next month, April 15th.
For anyone listening, before we move on to our next topic, if you have any questions on anything we just covered, the basics of taxes or deadlines, please pop them in the questions now and we'll loop back. All right, so let's talk about tax deductions and credits. What are the expenses that I can deduct, and how do I make sure that I'm maximizing deductions?
Yes, see, this is what I love to talk about, tax deductions and credits, because they work so well to where, it's really an incentive for business owners to take, full advantage of this opportunity. Because remember, anything that you do before December 31st is called tax planning, right? Anything you do after December 31st, like into January, if you're trying to do anything, that could get you in trouble because it's called tax evasion, all right? But as long as you're doing it before December 31st, before the end of the year, you're able to look at your numbers and figure out, okay, do I need to take any further tax deductions? So there are like the standard deductions like internet, cell phone, if you have a home office as well, you're able to take the home office deduction. If you're going to visit clients, a lot of my clients actually travel to go visit their clients. And so all of the business miles that they're driving, that is going to be tax deductible. And so you're also able to look and see if you want to depreciate the vehicle that you're driving to go visit your clients. And so it's a lot of opportunity there, just in like the mileage that you're taking, and then as well as any maintenance, any repairs that you are doing for your vehicle. So there are some restrictions to that, but there are a lot of benefits as well. So and then another thing that I like is the depreciation. I mentioned that earlier. Anything that you're purchasing more than $2,500, which, in this field, you can get like one tool and it's going to be way over $2,500. So that is something that you're really able to depreciate. And with the depreciation, you can actually decide, okay, do I want to depreciate this now? And the depreciation is just meaning that it's going to help lower that tax liability. It's going to help lower your taxable income. Okay. So with the tools and the equipment that is being purchased, you can decide whether to depreciate that all in 1 year, or you can schedule it out for upcoming years. So it really depends on what your numbers look like. It depends on what your goals are. So it's a lot of wiggle room and a lot of opportunity there with depreciation alone. So that is one thing that I like to share. See some other, like any type of equipment, any type of medicines, if you're buying special lotions, all of that is going to be deductibles. You're able to deduct all of that. And then one credit that we already mentioned was the self-employment credit. So you're able to get half off those taxes, just to help you out. Like that is something that the government offers. But yes, it is ample opportunity to maximize on those tax deductions. And sometimes we forget. And so that's why, again, going back to the bookkeeping, you have to keep those receipts. Like you definitely want to keep those so that you can remember, and you want to make sure that you're putting those in your records or your bookkeeping.
And what about things like continuing education?
Oh yeah, that is a good one too. Because, in this industry, you have to, get your the amount of educational credits that you need and the programs. If you're learning a new skill, yes, you're able to deduct those as well. So you want to keep track of those too.
And membership fees, like professional membership fees?
Yes, anything that you are a part of, it just has to be related to your business. So if you're a part of something, like a book club, of course not. But
Yeah.
anything that is related to your business that is going to help you, the membership fees are deductible, and as well as the educational courses, as long as it's something that is towards your industry and that is going to be able to help you. And it kind of goes back to with the deductions, there are a set of rules that has to apply for the deductions in order for you to be able to take them. And one of them is simply that it has to be necessary and ordinary. It cannot be like a diamond encrusted bed or whatever. It has to be ordinary and nothing lavish. So as long as it's for your industry, something that you're going to need, you can definitely write those things off as a deduction. And as well as bad debt, like that is one that people miss. So as long as you can prove, you sent your patient or your client an invoice, they never paid it, you can write that off as bad debt.
Oh, that was actually going to be my next question, going back on separating your personal and business tax deductibles. I guess you put it quite nicely to know what the difference is and how do you separate, as long as it's good and helping your business, right?
Yes, it has to be for your industry. Nothing, crazy or lavish. A lot of people ask the question, what about when I get my makeup done and when I go to speaking events, like, is that deductible? And unfortunately, it's not deductible because I think the code is after you have finished with your events, after you have gotten your hair done, after you have gotten your makeup done and your wardrobe, like, can you go outside and still have that makeup done? Can you still be made up outside of this event? And yes, you can. Like, you can go to dinner next and still have on your makeup and everything. So the only thing that you have to look at, things like that, when it's like a gray area and you're not really sure, then the best thing to do is to not take that deduction, because you don't want to raise any type of red flags. That's probably not going to be worth it. But yeah, when it comes to, I get that question a lot, like, what about when I go to my events?
Yeah.
Yeah, it's just best to avoid that. And we can find other ways to maximize that are going to be safe.
Good to know. Is there are there any resources you recommend for people who are unsure to figure out, is it a tax deductible or not?
Yeah, so you can actually, for here, like, you can go to irs.com and irs.gov, and you can actually look that up. And it gives you a list, and as well as the regulations when it comes to using those tax deductions. I do have an ebook. I have to send you the link for it. I forgot to put it in there, but I do have an ebook about tax deductions, and it's a list of like the general ones and like how to take those. But it is a resource on irs.gov that you can check into as well. That will give you the direct information of how to do it and some of the things that you can take and not take.
That will be so helpful. We'll get the link from you and we'll share it with the community afterwards. Yeah, that'll be amazing. Okay, so let's move on to strategies for planning for your taxes. And also minimizing tax liability. What are things people can do to plan better for their taxes?
So if a lot of clients come to us and they say, hey, I already know I'm gonna owe taxes. What can I do? Like I said earlier, as long as you are trying to strategize before December 31st, it's good. It's totally good. It's tax avoidance is what you're trying to do. But anything after the year end is tax evasion. So what you want to do is you definitely want to sit down with a tax preparer and say, hey, this is where I'm at. What kind of strategies can I put in place? So what we like to do for our clients, and we also just, have people get on the calendar, especially around June and July, because that's a good time where we can see where your business is going, how is it growing, and then we're able to do a tax planning. So a tax plan. So a tax plan is one of the strategies that you can put in place for your business so that you are able to really look and see, okay, now what if I buy some more equipment? Like if I buy some more equipment and then depreciate it, would that help me at all? And so around June and July is where we're able to kind of look at your numbers and see what opportunities can we put in place to help break down any type of tax liability or any type of tax debt. And so definitely tax plan is one thing. You can look into doing a 401k. There are different types of 401ks for entrepreneurs. There's a solo Roth account that you can look into, and you can just put money towards this account. And when you do that, that's tax dollar, that's money that is not going to be taxed, right? That's not going to be taxed yet. And so you're able to look into those. And then if you have a W-2 job, like if you're working your W-2 job and then you have your business as well, you can look into with that W-2 job if they have any 401ks that you can invest into as well. And then that is going to help you at the end of the year too, as well as the HSAs, the health savings accounts. You can look into those. That is another way for you to just send money over that is not going to be taxed. Let me see. I think that's about it, but I would definitely do tax planning. Like I think that is the biggest thing, so that at the end of the year, you already know where you're headed towards and what things are looking like, and you have time to maneuver and maybe do some other things that are going to help you save on those taxes.
And what about retirement? I hope I didn't miss that.
Yeah, that was the retirement plans, the 401ks.
Right.
Yeah, that's definitely a method to where it would definitely help you, but there are some limitations of how much you can contribute, but the amount that you contribute is going to help break down your taxable income.
Okay, and that and for planning for, I know we mentioned earlier when you have hiring staff, what are some good ways to plan for those taxes?
Yeah, so before you so the first thing you need to look at is whether or not you are going to have your staff on W-2s or if you're going to issue them 1099s. So depending on what state you're in, sometimes the 1099s may have a regulation depending on what the industry you are in. Like certain med spas cannot have 1099 workers. So you want to double check that with your state and how you're running your med spa. But for others, so the first thing to do is determine whether or not you want your staff to be on a W-2 or a 1099. The 1099 is basically where you're going to pay them a salary and they are responsible for the taxes that needs to come out of that. Now, if you have them on a W-2, so with that, you're going to have to pay payroll taxes, the software that you're using to generate the payroll. But that way, you are going to be responsible for making sure the taxes get paid on it, like the state taxes, the federal taxes, the self-employment, all of that. So it's just a matter of which way are you going to go? Are you going to go the W-2 route, or are you going to go the 1099 route? So that needs to go into your planning as well, because you need to plan out how you're going to do the taxes, making sure that you are also considering the software that you're going to need to run your payroll. So
many things to think about.
Yeah, it is. But once you get everything organized, you're going to be able to run like a what do they call it? A well-smoothed oiled machine.
Well-oiled machine. I mean, It is one of the things that can be so overwhelming, but actually it's like anything you're doing for the first time or you're learning how to do it. Once you do it once, you set up and it's not so difficult anymore.
Right. And I think the benefit of that is when you are connecting with other people that are ready to help you and really get you started, that is one of the reasons why I do what I do, is because my first business, before I had my accounting business, I got into it and I had no idea how the whole taxes and the tax deductions, how that worked. And so I ended up owing in taxes when I should not have. And so that is why we like to link up with entrepreneurs, that are kind of in the same boat that I was once, and to give you the knowledge. And so you can go ahead and just bridge that gap, and you don't have to worry about getting in trouble first before you really, figure it out. Just go ahead and link up, and then you have all the resources that you need to, be on a good path of saving in those dollars and really keeping more of your profit in your pocket.
And so what can you share from maybe mistakes that you've made or mistakes that you've seen that are common mistakes that wellness practitioners make that can be avoided?
Well, first of all, the first mistake is not connecting to the correct resources. Like when we try to do it on our own, and sometimes, you can do it on your own, but it's a lot to learn. And so you want to hook up and connect with someone that can kind of hold your hand and just navigate you through that a little bit. So the first is finding a professional. Like, you want to go ahead and do that, because not doing that is going to cost you. It's going to cost you eventually. It may not cost you today, but it may cost you down the road, and that's not what we want to happen at all. So that's the first big the first big thing. Another thing that I see a lot is just not keeping up with the books. Like, the bookkeeping has to be the foundation for everything. If your taxes are a little messed up and out of whack, it's probably because something was not corrected or something was not correct in your bookkeeping. And so creating that firm foundation of those books, that's number one. So I see a lot of entrepreneurs that miss that step, or they feel like, okay, I have a lot going on, let me get rid of my bookkeeper, let me get rid of my accountant. And that's not what you want to do, because not only does bookkeeping keep you compliant, but it gives you a clear understanding of where your numbers are. And so I don't know any entrepreneur that does not want to know and fully understand their numbers. So we have to be able to, see our numbers really clearly. And that is what bookkeeping is going to offer. It's going to offer you that. It's going to offer you audit protection in the case if you were ever to be audited by the IRS. If you have your books together, that will substantiate everything, every expense that you have made. So just missing out on those books is one thing I see a lot. Missing out on depreciation, that's big for us. Like, that's one of the things that we ask in our organizer is, have you purchased anything over $2,500? Because taking that as a tax deduction as opposed to depreciating it is going to help you out more than just taking it as a tax deduction. I think that's about all of the big red flags that I see. And commingling, we talked about that. When you have your personals and your business all mixed up together, that's a no-no. But again, that goes back to having your bookkeeping organized.
And if someone decides to go to seek help for someone with their taxes, what can they do to make sure they have everything ready for them? What do they need all the documents and information, what do they need to have on hand?
Yeah, so on hand, what you would definitely need is your business information, such as your EIN. If you have taken the S Corp tax election, just to have that paperwork readily as well. Then obviously your profit and loss, which is going to show how much you've made, how much you have sent out in business expenses. So you want to have your financials ready, your profit and loss, and your balance sheet. Then if you have, a list of receipts too as well. Then for your personal, your social security number, your address, things like that. If you have any other things that are going on in your life, like a mortgage interest, things of that nature. But with us, we have a system to where we ask you questions, and those questions will prompt you to give you a list of the things that are needed. And so it's not like, you have to pull your hair out to go find this stuff, but we will give you a list of customized things according to the answers that you have provided. It's going to prompt you and tell you, okay, well, we just need a list of these items. So it helps you make a smooth tax experience to where it's not, everything's all over the place and you got to go to this place and this place to gather things, but it'll be right in front of you, everything that we need. Exactly.
I'm going to go ahead and open the floor for any more questions. We've gotten a few as we've gone, but if you have any questions, throw them in the comment section now. We do have one for a therapist that's a contractor, works 4 days a week and one at the office, employee 1 day a week at another office. So she's asking if she does a session or two out of her home once a month. She doesn't want to deduct for home office. What mileage is deductible? What are the details there? If you're separating, working from home, contracting, do you have any advice for that? Is there separate?
So, for her contracting, is she receiving how is she paid? Is she paid through a 1099 or is she paid with a W-2?
We don't have that information right now.
Okay, so if she is a 1099 worker, then that is going to automatically generate a Schedule C. That's going to automatically generate a Schedule C for her taxes. And so with that being said, she is able to take the home office deduction if she likes. So there's two different ways you can do that. You can take it and just take the standard deduction, which is like 300 square feet. And it's $5 per square feet. But that space has to be only dedicated for her office. So it cannot be like, a spare bedroom or the dining room. It has to be a space only dedicated for her office only. So she's able to take that. Now she can do the standard or she can do the itemized. The itemized way is where she's even able to go deeper and write off the percentage of mortgage or rent that she's using for her office. She's able to write off the percentage of utilities that she's using for her office. So she is able to take that as long as she is a 1099. Because I think I heard you say the word contractor. So if she's a contractor, yes, she's able to do that, as well as the deductions. She said something about mileage. She can take the business miles. What the IRS prefers you to do is to have a mileage log. So that is where you are writing down the date, the time, where did you go, how many miles you use. So you want to have some type of log book where you're writing this down, and you'll be able to use those miles and just write them off. There is no limit to how many you can take. You can take as much as you drive. But what you want to do is see if you have had any type of repairs or maintenance done to the car. You want to see if that amount is going to be more than your business miles. You want to see which one is going to be more beneficial to you, because you're also able to write off any type of oil changes, tire changes, maintenance, repairs that you have done for the car that you're using for business. Okay, so you can't do both. You can't do the repairs and stuff and the miles, but you can choose to see which method is going to be more beneficial to you, and then you would take that method. But yes, definitely do your home office. Definitely do your mileage, or either the repairs for your car, and then anything else that you have spent working as a contractor.
I have another question. This person says she doesn't have a W-2 job, but she pays herself as a 1099 employee. Do I still file taxes with that? This is her first year in business.
Yes, absolutely. Yeah. So like I just said, like when you have a 1099, you are definitely in business for yourself. So once that 1099 is calculated on your taxes, it's going to populate a Schedule C. So yes, you would do the same thing. You're going to put in the amount that you have made. that's on that 1099 is going to go on the Schedule C for your income. So you want to get together any type of receipts because you want to write those off. So then you are as well, you're able to take the home office. Again, has to be just for your business, and you're able to take any type of mileage or repairs and maintenance, whichever is going to be more. So you're in the same situation as well. 1099, it acts just as if you are, you have a regular business. Yes. So any type of business expenses, supplies, your internet, your cell phone bill, all of that stuff is going to be tax deductible.
This is a cool one. Is getting our own massage a deduction, and would it be considered continuing education?
If getting your own massage is a tax deduction, you could probably somehow prove that, but is it worth it to prove it? Now, if you're going through a legitimate class, of course, that's going to be tax deductible, but I think that you would have a challenge at proving if that is an actual business expense. So I would probably not suggest doing that because you have to go through all the motions of proving that. So is it really worth it? It's like one of those things that are in the gray area. And then if it's going to be an actual class that where you're being taught how to do something, if you're being taught how to give a particular massage, then yes, that would go towards your continuing education. But, just not to go in for a massage and be like, I'm learning something. No, I wouldn't risk that part. But if it's a legitimate program to where you're learning something about massages, then yes, that's going to be tax deductible.
We have someone asking if they need to file quarterly taxes.
Yeah, so that really depends on how your business is set up. If you are a S corp, then S corps have to file quarterly taxes. That's the part of their compliancy. They have to file quarterly taxes. Now, if you're a sole proprietor or an LLC, and if you owed more than $1,000 last year, then yes, you have to file quarterly taxes. When you file your taxes, and if you owe, what's going to happen is these vouchers are going to be printed. And with those vouchers, it has an amount on it. So like if you owed $500, if you owed over $1,000 last year, when those taxes are being printed, they're going to print out vouchers for each quarter that you have to pay. So for the first quarter, it'll be the amount on there for you to pay. It'll go forth like that. Then if you have not had to owe any taxes yet, and if you're operating as a sole proprietor or an LLC, then no, you do not have to file quarterly taxes. But you would definitely be notified if you do. They would definitely tell you, hey, we need for you to file quarterly taxes. But usually that is not prompt until you owe more than $1,000 in your business, from your business.
Okay, so if you need to, you would know that you need to.
Yes, you would definitely know. But if you have not been notified by the IRS to file quarterly taxes, and if you're not operating as an S corp, then no, you do not have to file quarterly taxes. But if you owed more than $1,000, then yes, you're going to need to go ahead and just file the quarterly taxes.
I can't believe how quickly the time has gone.
Oh no, it's not time. I'm just warming up.
I know, we're just getting into it. Before we wrap up, if anyone still has questions, please pop them in now. But TK, where can people find you if they need to find you?
Yeah, so they can find me on Facebook at TK Barlow. Then also you can email me at hello@tkbarlow.com. And I believe my profile is all the same. It's at hello TK Barlow. And that is on Facebook and Instagram, I believe. But if not, you can always send me an email, hello@tkbarlow.com. And then my website is tkbarlow.com as well.
Thank you. We do have another question.
Yay, I love questions.
We'll do it. Okay, the question is about bookkeeping revenue streams. Is income for commission for MLM a different stream than selling retail for the same company?
One more time.
Okay, so is income for commission for MLM a different stream than selling retail for the same company? Sorry,
I'm not sure if I understand that one, but the commissions, if you are receiving commissions in, it should be where you're able to categorize that as commissions. So it'll be income, but it'll also be a line for that particular commission that you're bringing in. I'm not sure if I answered that correctly.
Yeah,
but
I think maybe it was to do with the commission for your income versus selling something for a company. I'm not sure if I'm
yes, so if you're selling something, so with the bookkeeping, you can break it down to different types of categories. So if it's just income from the product or services that you're offering, you can either have that all as one income, or you can break it down individually. So if they're bringing in income from a particular product, you can categorize that as that particular product. So you know, okay, this is how much I have made in whatever this is. And then for your commissions, you can definitely make another line for your commissions as well, because on the Schedule C with your business, there is the commissions is its own category. So with your bookkeeping, what you're doing is you are basically matching up your books to what the Schedule C is when you file your taxes. So that's why it's so easy, because with your books, everything is going to be already categorized. And so when it's time to go and file your taxes on the Schedule C, the information from each category is just going to be transferred to the Schedule C. So that's why it's good to keep your books, because everything is going to be organized. But yes, you can categorize your commissions as one thing and the product or the services that you're offering as another thing.
She says you answered the question. So
okay, great, good.
If there's nothing else, thank you so much. This went so quick. This was amazing. Thank you for all of your information. If everybody's feeling mush in the brain and they leave with one piece of information, what do you want people to walk away with from today's talk?
To keep your books organized. That is the foundation to everything. And it's gonna, as long as your books are good, your taxes are gonna be good as well.
I love that. That was 2 sentences that I know I'll stick in my brain. Thank you so much. Thank you, everybody. Yes. We will post this into the group straight away. We'll also add it to our YouTube. We'll add it to our newsletter, and we've got all TK's information in the chat. And share that ebook with us. I know a lot of people will be interested.
Yes, I will.
Thank you so much. Thanks, everybody. Have an awesome
Thank
day.
you.
Bye.
Bye-bye.